Question on everyone's mind, are we headed for a recession?
A recession.
A recession.
Recession. Recession.
Recession. A mild recession.
We had seen it coming for months. US economy is unofficially in recession. The Bureau of Economic Analysis today released the Advance Estimate GDP data for the second quarter of 2022 and it's negative. That's 2 consecutive quarters or around 6 months of negative GDP growth, which is often the cited rule of thumb to be in a recession. But economists and strategists remain split on whether we are in an actual downturn or not due to the ongoing strength in the labor market.
I do not think the US is currently in a recession.
Doesn't matter if it's official or unofficial. These are not just numbers on a financial chart. This will have real-life implications for all of us. Jobs will be lost, firms can go out of business, poverty can rise, and the value of our assets and investment could hit rock bottom. But a recession could also be a great opportunity to build some wealth, but only for someone who understands, learns, and prepares for the situation. So in this video, I'll explain how we got here, what it means for you as a consumer and an investor, and how we can survive this together. Finally, not a financial advisor, just another random dude on the internet. So with that said, let's dig in. For those who are new here, my name is Srijit, and in this channel, we talk about recession because we don't have anything good to talk about. The National Bureau of Economic Research defines recession as a significant decline in economic activity that lasts more than a few months. But how can we actually measure this economic activity? 3 words: gross domestic product, or the GDP. GDP is a metric to measure the financial health of a country, and it's simply the total value of all the goods and services in the country. And for those who are thinking how it's even possible to measure that, stop thinking. It's not important how we measure it. Just understand that when you go to the supermarket to buy groceries, or when you watch a movie, or even when you just get a coffee, money is exchanged, value is transferred, and you contribute to the country's GDP. The country's GDP increases when you have more money and when you are spending that money. So a negative GDP means that we are not spending as much as we did last year. And when we don't spend, there will be less economic activity, and based on the definition we read earlier, a recession. But why do people spend less? Okay, obviously, when they don't have much money, people will spend less. But it's not as simple as that. Most of you might remember the last time when we had a major recession.
CBS News special report.
And ultimately, our country could experience a long and painful recession.
Was the worst day on Wall Street since the crash of 1987.
Could be the most serious recession in decades.
In 2008, US housing market collapsed, taking the economy with it. This was due to an asset bubble, which occurs when the price of something goes beyond a sustainable level and then finally crashes, just like what happened with the property prices in this case. And finally, when the bubble breaks, the value of the assets drop, people get less wealthy and they start to spend less. And we know that when spending is reduced for extended periods, we get into a recession. But this was not totally unexpected. Many economists warned about this housing bubble, but they were ignored or we acted on it a bit late. But there are other events that come without any invitation that take you by surprise and could lead to a recession. Those are called the black swan events. These are the events which we can't predict, like COVID-19 pandemic or the Russia-Ukraine crisis. But these events bring in a lot of uncertainty. And when people are uncertain about the future, they save more, they spend less, and we all know when that happens what it can lead to. But the third and the main reason why we are in a recession now is an overheated economy. An economy is said to be overheated when it grows too fast, when there is too much demand but very less supply. That means there is more money out there in the market, but there are fewer goods available to buy. And how did we get here? There are 2 main reasons. To avoid a financial crisis, the central banks around the globe started printing more cash and thereby increasing the money factor in the equation. And we know most of the world's manufacturing happens in China. And due to supply chain issues, the COVID-19 pandemic and the recent Russia-Ukraine crisis, the companies couldn't get the products from the factory to the market as fast as they wanted to. So this reduced the supply factor in the equation, which led to increased prices of the product and increased inflation, which is just the rate of increase of prices.
With inflation figures to hit their worst level in decades.
Inflation jumped 9.1% over the past year, the fastest pace in 4 decades.
A little inflation is not a bad thing. On the contrary, it keeps the economic activity going on. But if left totally unchecked, it can make the life miserable for common man and then finally go out of control and lead to a situation called wage price spiral. I will explain this with an example. Suppose you are an employee in a bread company and your country is currently going through a period of high inflation. On one fine day, you go to the supermarket to buy bread and see these high prices. Not just for the bread, but for everything, the prices are so high. So what do? You return to your company, talk to your boss and ask for more salary to afford the increased prices. Hopefully, your boss agrees to pay you more, but if he has to do it for most of the employees, the company costs will go up. The company decides that they have to increase the price of the bread to compensate for this additional cost. And the next day, when you go to the supermarket, you see that the price of the bread has gone up again. So now you head back to your manager to ask for more salary. And slowly it starts to create a spiral. And if left totally unchecked, it can lead to a situation called hyperinflation. And that's one place which we don't want to go. And to bring inflation under control, the government or the Federal Reserve steps in. And as we saw earlier, there are two factors that cause inflation, the demand and the supply. The Feds, they can't do anything to increase the supply, but they can lower the demand by removing the supply of money from the market. And the Feds, they have a tried and tested method for this to increase the interest rates. When the interest rates are high, there will be less borrowing and less supply of money. For example, when the home loan rates are high, you won't probably go to a bank to get one, right? But then there is one problem. When there is less money available for people and business to borrow, they will have less money, they will spend less money, and that can lead to a recession. And this interest rate hike was what the US Federal Reserve has been doing for the past few months. But then there is a catch.
It's walking a real tightrope here. It needs to slow the economy without pushing it over a cliff.
When the Fed tries to avoid a recession by increasing the interest rates, they have something called a soft landing in mind. Think of it like this. Consider the economy as an airplane. We are all the passengers and Fed is the pilot. The pilot need to maintain the right speed and the right angle of descent for the plane to land safely. If the plane is approaching a bit faster or slower, or if the angle of descent is not correct, then there will be a hard landing or in worst case a crash. Similarly, the government is trying to balance the economy with just the minimum needed rate hikes to stop inflation without pushing into recession. At least that's what they think they are doing. But if you check the history, the US Federal Reserve's track record on this is not so good, and a successful soft landing is extremely rare. 8 out of the last 9 Fed's tightening cycles have ended up in a recession, and we are almost on the 9th. All these factors which I said until now is out of our control, but what we can do control is our behavior and actions, and that will ultimately decides how we survive this recession. So what can we do? Cut down on all the unnecessary spending. If you are anxiously waiting to get your hands on the new iPhone next month, then think again. Maybe skipping the purchase for 1 year would be a good idea. If your family has 2 vehicles, then consider reducing it to 1 and try using more of public transit. So use all that saved money to build an emergency fund that can cover your expenses for the next 3 to 6 months. This will give you a safety net to fall back on so that you can ride the wave and emerge from the recession back on your feet. Start learning a high-valued skill that can give you access to the many benefits of self-employment. If you have considered getting an advanced degree or just improving your work skills, this may be the right time to do it, and use that newly learned skill to do a side job or start an online business which can increase your financial security by creating multiple streams of income. And in this video, you can find the best side hustles that you can start from the comfort of your own home. As important as it is to find other sources of income, your primary focus should be to keep your current job. So get to the office early, finish your tasks on time, be active, and be more visible to your employer. Make yourself so valuable to your company that they can't let you go even if the situation demands it. If you already have these points in check and still got some money to spare, then get on to a shopping spree. A recession could almost be thought of as a Black Friday for the investors. If people have less money, their priorities would be to buy food, pay for rent instead of investing in the stock market or real estate or crypto. So the value of these assets are likely to fall. And if you are financially sound, this is a great opportunity to buy these assets on sale. And if you are still not convinced, a wise man once said, the market will always bounce back. And finally, my personal strategy is to continue investing. Dollar cost average a fixed amount every month into my portfolio, primarily to the broad market index funds such as the S&P 500 and some individual stocks. And when it comes to crypto, I'm mainly focused on Bitcoin and Ethereum. At the end of the day, I'm not going to invest more, I'm not going to invest less, I'm just planning to go at the same pace. You can watch this video if you want to know more about assets in my portfolio. I hope that things will get better for you and your family, and we can all survive these difficult times together. If you learned something new from the video, then please give it a like. Thanks again for watching, and I hope you have a wonderful rest of the day. Adios.